Imagine waking up to see your country's currency bouncing back from a shaky dip. It's like a financial comeback story that could impact everything from your next overseas trip to global market vibes. But here's where it gets controversial. Is the central bank's intervention a heroic rescue or just a band-aid on deeper economic woes? Let's dive into this intriguing development with the Indian Rupee making a strong showing against the US dollar thanks to the Reserve Bank of India's RBI renewed efforts to stabilize things after a recent slump. And this is the part most people miss. Understanding how currency defenses work can reveal a lot about international trade and inflation battles. Don't worry if you're new to this. We'll break it down step by step, like chatting with a knowledgeable friend over coffee. First off, for those just starting to grasp forex basics, currencies like the INR, Indian Rupee, and USD, US dollar, fluctuate based on supply and demand, economic policies, and global events. A slump here means the rupee had weakened, possibly due to factors like rising oil prices or investor outflows, making imports more expensive and potentially stoking inflation. The RBI, acting as India's central bank, steps in to defend the currency by buying rupees or selling dollars in the market to support its value. This isn't uncommon. Think of it as a coach reinforcing a team's defense during a tough game to prevent further goals, or in this case, further depreciation. In this scenario, the RBI's actions have reportedly helped the INR gain ground, boosting its exchange rate and providing some relief for businesses and consumers alike. But here's the twist that sparks debate. While intervention can stabilize markets in the short term, critics argue it might mask underlying issues, like structural economic imbalances or reliance on foreign capital. Is this a sustainable strategy, or does it risk depleting the RBI's reserves over time? For beginners, picture it like borrowing money to pay off debts. It works temporarily, but could lead to bigger problems if not managed well. Examples from history show that currencies defended too aggressively sometimes face backlash, such as speculative attacks from traders betting against the central bank's efforts. On the flip side, supporters say it's essential to maintain purchasing power and avoid a full-blown crisis, especially in emerging markets like India, where a strong rupee supports growth. To add a bit more context, this development comes at a time when global currencies are under pressure from factors like US interest rate hikes or geopolitical tensions. The Indian Rupee to US dollar pair is a key indicator for India's economic health, reflecting trade balances and investor sentiment. For instance, a stronger rupee makes Indian exports pricier abroad but cheaper for domestic buyers of imported goods, creating a delicate balance. And this is where things get really interesting. What if this intervention signals a broader RBI strategy amid talks of digital currencies or policy shifts? It's a topic that's divided experts. Some hail it as proactive governance, while others see it as potential market distortion. As we wrap this up, consider these thought-provoking questions. Do you think central banks should actively defend currencies or let market forces decide their fate? Could this rupee rebound be a sign of India's resilience? Or is it hiding vulnerabilities that might surface later? Share your views in the comments. Do you agree with the intervention or do you have a different take? Your insights could spark some lively discussion.